Well, good morning and welcome to the Hub Series 2021, where we'll be bringing the world of payments to you. You and the other 440 who have registered for the Hub Series. What a fantastic turnout from across a wide range of organisations and industries. So thank you very much for your support. Today, we'll be talking about who's shaping the future of payments. And to take us through that conversation, we have our keynote speaker, Dave Birch, and a panel of overachievers who will be talking about who is shaping the future of payments. Now, both Dave as keynote and the panel will be taking questions. So make sure if you do have a question, jump onto the Zoom Q&A feature, put that question up there, and they will endeavour to answer that on the way through. Also, at the end of this morning, a little survey will pop up where you can give us some anonymous feedback and just sort of reflect on how awesome the session has been, which is really great. And also I'd like to thank our session sponsor today, FIS, the session 2 sponsors, Buttle Finlay, and our series supporter sponsors of Swift, Middleware Group, and Westpac as well. So you can check out more about the event sponsors on our website. And now I'd just like to, what I'll do is I'll introduce Dave and the panel together. So when Dave finishes talking and the panel joins him, they can just carry on the conversation while it's still hot. So our first speaker today, Dave Birch. Welcome, Dave. He's coming in from the UK and he's spoken at a few of our events in the past, so very well known to the New Zealand market. And there's always a chant that goes up, bring back Dave. So he's back here again as well. As you know, Dave is a prolific author, advisor and commentator on all things digital and financial services. And he's also a prolific author, which is great. Now, Dave's been so generous to provide us with 15 copies of his latest book, The Currency Cold War. And so all of you who are on here today will go into a draw to win one of those copies. So thank you very much, Dave, to provide that with us. Today, Dave's going to talk a little bit about the impact of COVID, both during and post, and then also taking a truly global view on the players that are accelerating that currency Cold War and how that's going to roll out into the future. Now I'd like to introduce the panel today. Now, John Ryan, Director General of the Emerging Payment Association of Asia, and was also one of the co-founders back in 2018, will be facilitating this glorious lineup. Now I'd like to also introduce Andy White, Chief Executive Officer of the Australian Payments Network. Now, Andy's had 25 years international experience, which you'll be able to tell by his accent, incorporating roles in the Bank of England, LCH ClearNet, and also the Australian Securities Exchange. Andy also holds a number of advisory roles across the Australasian markets. And Maxine Elliott, CEO of Paymark, and also a significant experience across both wholesale and B2B markets, and also traversed both small startup businesses right the way through to global organisations as well. So as I said earlier, with the guidance of John, this panel of overachievers will really have a really insightful conversation to have shortly after Dave has done his bit up front. So let's welcome Dave to the session.
Hey, Steve, and thanks very much for inviting me back again. I really appreciate it.
Look, it's always a pleasure, Dave. It's such a shame that you couldn't be here in person.
It really is.
Now that you've had your 2 jabs, hopefully you'll be able to make it down here before too long. So,
oh God, I hope so.
Yeah, really looking forward to hearing from you today, Dave. And I'll leave it over to you to take us through what you want to share.
Well, thanks very much, Steve. Let me just switch on the slides and hopefully everybody can see. You can see that okay? Great. Okay, so Steve asked me to talk about what's coming next. And so I'm going to do that in 2 parts. I'm going to talk a little bit about the general post-pandemic, or as I think of it, inter-pandemic situation. And then I'm going to talk you through what I think is really the big next step in our space. And I hope you'll agree with at least part of my analysis. So as Steve mentioned, I wrote some books. Here are some of them, and they're available in all good bookshops, and I hope some of the terrible ones as well. So please rush out and order those before we go any further. So let's start by just taking stock of where we are at the moment. So last year, I made a couple of presentations about how the immediate situation looked and where our clients were focusing on looking forward. And we called this the 4x4, the 4+4 analysis. And what we observed was that on the payment side of things, there were these 4 key trends that we'd seen. And then there were 4 key adjacencies that were shaping the next step. And today I'm only going to talk about the payments trends, not about the adjacencies, but the adjacencies won't be any great surprise to any of you. So if we talk about the payment trends, I think I'm not saying anything controversial now by saying what we saw essentially was the pandemic accelerating trends that were already there, but I'm not sure we saw anything really new coming along. So if we look at, first of all, the transition to contactless everywhere, the spread of QR codes for checking in. I mean, the example I always use for people is the little cafe around the corner from us, where now you go in and you scan a QR code on the table and you order what they want and they bring it to the table. You pay for it in the app. When you've finished your coffee, you get out and walk out. After the pandemic, I'm not sure we're going to go back to doing things the old way. I was listening to a program on BBC Radio the other day, actually, about pubs. And they were talking about, people now are used to ordering on their phone in the pub, but people don't want to go back to queuing up at the bar and hoping to catch the barman's eye, when you can just sit at the table with your mates and order what you want and bring it over. And actually, interesting, that's also created an interesting sort of subculture, because of course on the phone you can order drinks for people that are in other pubs and get it sent over to their tables. So the idea that we're going to go back, I'm not sure. I think a lot of people, they were pushed into trying new things by the pandemic and they like it. So we're going to that touchless mode. I think the pickup in contactless, in particular in some of the key markets, certainly true in the UK, and actually in your markets as well, is that the acceleration of contactless has made people start to think about cashlessness again. And I think what's come up in the UK is the basically the lack of a strategy in that space. So I sort of phrase this as the Sweden problem, which is, if you don't have a strategy towards cashlessness, if you just go cashless, then some people get marginalized and excluded, and that's not really what we want. So the idea that cashlessness needs a strategy has been accelerated by the pandemic as well. And if you look at the use of cash, I mean, I don't want to cast aspersions on the New Zealand or Australian population, so I'll just stick to the UK figures. The amount of cash that's in circulation has gone up significantly during the pandemic, even though the use of cash for transactions has collapsed. So for example, in the UK, we're about to launch a new £50 note. I actually couldn't tell you what it looks like. I can't even remember the last time I saw a £50 note, but there are gazillions of them in circulation. Of course, they're not in circulation. They're underneath mattresses in various places. Anyway, the point is, we need a strategy about cashlessness now. It's not good enough just to let the slide to cashlessness continue. The issue about the use of electronic payments, universal and omnichannel. In other words, what we see is a migration of different payment options basically into the phone, into mobile in one way or another. And what we see is that being used everywhere. So we're moving towards a situation where it doesn't matter if you're in the cafe or you're on the website or you're on the mobile, you'll pay in exactly the same way, which is, something will pop up on the phone and you hit OK. One of the developments in the UK that I'm quite interested in is the evolution of the request to pay infrastructure, where you have the standardized billing and the standardized options to respond to that. So we see omnichannel and universal. And what we did see in many, I suppose you could argue this was a little bit unexpected in the pandemic, was the problem to do with government support in emergencies. So in the UK, for example, what we saw was that people who needed help found it very difficult to log in to access the government services they needed, because we don't have any digital identity infrastructure. We saw tremendous fraud. I mean, I was looking at the figures a couple of days ago about unemployment fraud in the US, which is astronomical. In the UK, even the government's own figures are that something like, I can't remember exactly, I think 25 out of the 40 billion pounds that went in pandemic loan support is never going to be recovered, because people just made up bogus companies and filed for these loans and then disappeared with the money. So this is something we hadn't really thought too much about before, but the issue of how governments get support to individuals and organizations, we've had to think about that as well. And in some parts of the world, they did it in quite a sensible way, which was they used mobile payments as an alternative to bank accounts. I've used the example of Colombia on the screen there. But we do have to factor this more into our thinking going forward, which is, what do we do when things go wrong? How do we make ourselves, how do we survive when things go wrong? So I'll just put that in. So what does that mean going forward into this post-pandemic period, or actually, as I call it, inter-pandemic period, because the idea that this is going to be the only pandemic is, of course, ridiculous. Of course, it's going to be another pandemic. I think pandemics were sort of the number one item in the UK government risk register for about the past decade. They never did anything about it, but they had it in the risk register, and it's still there. The people that learned a bit from SARS and MERS did better than we did. Hopefully, we've learned something from COVID, but of course there's going to be more pandemics, and so hopefully we can do something to be a bit more prepared for those next time. So what does that mean in terms of shaping payments? Steve challenged me to say, where are we going next? And if you start at the what I think of as the obvious stuff, but we can say, well, we can see the development of mobile wallets, and we can see the development of instant payment networks, and we can see the development of RTP, and in the UK, variable recurring payments sitting on top of that. But those things aren't really radical. I mean, they're fiddling about on the edges of the system that we have now. And I think what's happened throughout the pandemic period is we've been given a glimpse into actually a slightly different way forward, which in many ways is the area that actually requires strategic thinking. And that's central bank digital currency, not cryptocurrency or digital assets, but specifically central bank digital currency. Steve showed you the book I wrote about it last year. When that book was written, I thought I was looking at a sort of 3 to 5 year strategic. I mean, I was writing that book thinking I was being helpful to people who had that kind of strategic horizon. And what's happened throughout the pandemic is this whole thing has accelerated. We've gone from thinking about digital currency as crazy Bitcoin nonsense, and then tokens and DeFi and all these kind of things. And now the Bank of England has a digital currency task force. Now the Reserve Bank is looking at digital currency. China has a digital currency up and running. It's launched, it's out there. And there are other countries that are dabbling in different ways. So what I want to try and show you over the next few minutes is that rising to Steve's challenge about what's shaping, the next, it actually isn't the conventional infrastructure. It's what's coming in from left field, which last year seemed radical. Right now is pretty rapidly becoming mainstream, and that's digital currency. So let's start talking about digital currency and try to talk about it in a non-hyperbolic framework, which I hope will go some way to explaining what all the fuss is. As part of the work I was doing for various countries, I looked at the propensity for digital currency. And when I was doing this, of course, the same question kept coming up again and again, which is, in many of the countries that I'm looking at, essentially all money is already electronic. So what does it matter talking about digital currency? Does it make any sense? So if you look at New Zealand, if you look at New Zealand as the example, you already see almost all money is electronic. So why are we talking about digital currency. It doesn't make any sense. Why don't we just make, everybody's got a bank account. So why don't we just make everybody use faster payments, or make better apps and whatever? And that same argument applies in the UK and in other places as well. So I think the first thing we have to be clear about is, why are people talking about digital currency? And I looked at, the Bank of England and the ECB and RBA and the US Digital Dollar Project and various other things. And I came up with what I hope is a useful breakdown, which looks at the kind of pest analysis, the political, economic, social, and technological analysis in these 6 areas. And I found this a very useful framework, and I hope it will be a useful framework for you as well. So first of all, we have the political analysis, which says you have to look at, we want a digital currency because we want monetary sovereignty and we want control over our own economy. I think for many countries around the world, there is a slight concern, more than a slight concern, that once there's a digital dollar, and if people can store digital dollars in their phones, then about 150 out of the 170 currencies in the world will just vanish, because everybody will just use dollars. And if everybody's just using dollars, then you don't have any control over your own monetary policy. So we need a functioning digital currency because we want sovereignty. But it's not just about what happens within our borders for that same reason, which the digital dollar. We want to have some say in influencing outside our borders, or soft power, as people call it. So the first thing is the political drivers, and those are internal and external. Then you've got the kind of economic and social drivers, and these seem to fall into 2 groups. So on the one hand, you have that integration with the strategy towards cashlessness, and there's a number of different aspects to that. I've been particularly obsessed recently with the law enforcement side of things and trying to understand the balance between pseudonymity and anonymity and traceability, and how exactly can we get the security that we need, the law enforcement that we need, but also protect people's privacy. It's actually a very difficult problem to solve. And then there's something I didn't anticipate particularly in my book, but I've noticed is part of the ECB and the Bank of England and other people's plans, was this issue about sustainability has come up. Obviously, transporting cash around the place in vans is not a terribly sustainable way of doing things. And also, there are other aspects to cash distribution which are problematic. So the sustainability has become part of the issue there. And then on the technological side of things, you've got these 2 key areas, which are the resilience of the infrastructure. This, if we're going to have payments, they're vital national infrastructure. And there is an argument, you'll see in a minute, which says that Cbdc can increase the resilience of the infrastructure, which is a very good thing. And then for me, there's the key final point, which I think is certainly uppermost in the Bank of England's thinking and other people's thinking, which is that central bank digital currency is a platform for new products and services that we didn't have before. And that's really, to me, that's really the important thing. So let's just have a very quick look through those drivers so you can see what I mean. And then we'll go on to talk about what the implications of those drivers are. So if we first of all look at sovereignty, one thing I just want to plant in your mind is that it is actually a Cold War going on between these currencies. I'm painting a picture here, which is, deliberately put there to stir up a bit of discussion. But you might well see a situation where large parts of let's say Eastern Europe and perhaps even the subcontinent are all using Bitcoin, and all across Africa and Latin America, everyone's using Facebook. And there's the US dollar and the yuan are battling it out all over the place. And Canadian dollars have, because Canadians are obsessed with privacy, so Canadian dollars have a strong privacy play and so on. And perhaps in Australia, we see a situation where it's already the case that it may well be that an Australian dollar or a New Zealand dollar by themselves are not strong enough to survive. I'm saying this deliberately to get you guys thinking, but we might want to start thinking about some kind of even regional approach down there. And I noticed in the Financial Times today, in The Economist today that the West African countries are now looking at having a West African digital currency, and there's talk about a Gulf digital currency as well. So a kind of, an Asian digital currency is not crazy. So this isn't a prediction. I'm putting this here to get you guys to just think about these things and respond to them. In terms of influence, I rather like Niall Ferguson, the historian, who has written about this sort of thing recently. I wrote my book first, by the way, just remind you of all of that. But this Johnny come lately has been getting in on it recently. And unfortunately, he's a better writer than I am. So he said many countries find the America's ability to control the international financial system because of the dollar dominance. He says increasingly irksome, which is a phrase I find really interesting, the irksome use of sanctions. But it's an interesting point. Clearly, America needs a digital dollar to retain its influence, but other countries might not want to use that because they don't want. I'm not making a political point about whether American influence is a good thing or a bad thing. I'm just saying it is a thing, and people think about this. So, got to think about that. Then there's cashlessness. I just want to make the point here that I'm not a moron. I understand that there are lots of different aspects to cashless strategy, which are not just about the technology. There's a lot of different things to be taken into account. This comes from an old World Economic Forum breakdown that I rather like using. And I basically organize those things into these sort of four key areas. As I say, criminal activity is the thing I've been focusing on recently, but there are other aspects, in particular social policy and inclusion, which are a very important aspect of CBDC, because it could well be that we can obtain some inclusion goals through central bank digital currency that we can't obtain through conventional banking and bank accounts. And then there's this point about resilience. So here's a drawing of the sort of presumed, this is not any particular central bank, but this amalgamates some thinking from the Bank of England and other people. Payment interface provider is the Bank of England word for the new kind of institution which will convert essentially wholesale digital currency into retail digital currency. And what this says is, instead of building on top of the infrastructure we already have, in other words, instead of making digital currency an app that sits on top of instant payments or MPP in Australia or FPS in the UK, that wouldn't actually get us any additional resilience. And in particular, in the case of places like China and the Bahamas, sand dollar and so on, one of the crucial requirements of those currencies is that they should function as cash. In other words, you should be able to do person-to-person, wallet-to-wallet transfers in the absence of mobile networks or electricity, if there's been a natural disaster or something's gone horribly wrong. Now, that sounds a little bit crazy, but remember, in Europe, we've had Visa Europe go down. RTGS has been down a couple of times in the last few years. Target 2 went down in, was that October or something like that? And actually, even when I was putting these slides together, I saw a story on the wire saying one of the acquirers had gone down in the US and nobody could use their cards in McDonald's. So the way to get a more resilient infrastructure is not to build on top of the infrastructure we already have, but to build in parallel with it. And I'm just suggesting here, we need to think about that in two parts, because we have the wholesale central bank digital currency that's used in between institutions, and that's actually quite separate from the retail central bank digital currency, which works offline and person to person. So I just want to flag up there, those are different things, because we'll come back to that again in the future. And in particular, there are some implementation implications of doing this, which it's too complicated for today, but just to flag up what's going on there. So in terms of resilience, we build a separate infrastructure for central bank digital currency, and that separate infrastructure, because it's largely the internet and mobile phones, is actually not that complicated or expensive. Here's the thing about sustainability. So in the UK, we now have the UK Cash Industry Environment Charter, and I can see a question that's just come in about the vast power requirements of digital currency. And that's exactly the point I'm raising here, Rachel. So in the UK, the UK cash industry has formed this sustainability charter, and they want to reduce their environmental impact. I can't remember the exact targets. You can Google it. it's not just the diesel in the vans driving around and messing around filling up ATMs with cash, which then get blown up or stolen or whatever. But it's also about things, for example, they use a surprisingly large amount of single-use plastics for bundling and transporting the cash, and they're going to try and cut down the use of single-use plastics. But to Rachel's question, what's the point of replacing that with something like Bitcoin, where we're burning up half of the entire energy of the universe in trying to I was going to say it's a bit of an outdated picture of a Chinese Bitcoin farm now, because I think they're all shutting down today, aren't they, or tomorrow or something. So so there's sustainability, and then we'll move on to talk about my real focus, which is innovation. So why am I so interested in digital currency? In this case, it's because if we implement a digital currency well, and we'll come back to that a bit later on, what that means, whether we do it using tokens or balances or whatever, which we'll talk about in a second, we contribute to this new kind of this, people talk about it as money Lego. People can sort of plug together these products and services and just try them. And if we're not talking about messing around with bank accounts, and in particular, if we're not talking about credit creation, which we're not when we're talking about digital currency, we can be much more flexible about letting people play with this stuff and experiment with it and take it in new directions. And so personally, my view of things is, if you look at the cost benefit analysis around this, that there are costs that we can remove by moving to digital currency. We will certainly save some money on ATMs and cash infrastructure. Also, remember, the cost of cash falls very unfairly on the least well-off in society. So instead of wasting money propping up the cash infrastructure and trying to force people to keep ATMs, it would be better to spend that money on finding alternatives to help people use digital currency. But the benefit side of the equation is much harder to figure out, because on the benefit side, you've got the new products and services that people are going to invent using this stuff. And actually, we don't know what that stuff is. I don't know what that stuff is. And it's, I think it's actually quite exciting to imagine what people are going to come up with there. So I'll come back to that in a minute. Okay. So those are the sort of key drivers. I hope I've given you a good big picture of why it is that people are looking at digital currency when we have electronic money. Anyway, what we want is digital currency, which is a bit more like cash. It's person to person. It's resilient. It allows new products and services because it has an API which dollar bills don't, and allows us to build new products and services in the future. So how can we go about that? The space race. What's the technology here?
The distinction between the two.
Well, there's a couple of different. Sorry, I'm going to skip over that slide. I'm going to come straight. Well, I know I'm going to come to this slide. So, what technologies can we use to build this amazing new digital currency? So here is my evolutionary tree of electronic money and payments technologies, and I'm just going to this is the most technical slide, I promise you, but I'm just going to walk you through my little evolutionary tree to show you why I'm going to say some things a bit later on. So if you start at the top of my tree, okay, you'll see I distinguish between electronic money, which is, you saw that in the previous diagram. So electronic money is something that lives in accounts. Electronic cash is something that doesn't live in accounts. Electronic cash is something that lives everywhere else. It lives in wallets, but just as cash lives in my pocket and in my car and various other places, so electronic cash will live in my phone, in my car, in my hat, badge, in my fridge, who knows where. But the place it doesn't live is inside bank accounts. So that's electronic cash. Electronic cash lives in wallets, devices. If we're going to implement that, we can, broadly speaking, implement it in two ways. We can either have a single central operator, or we can have multiple operators. If we have a single central operator, that could be public. I don't think any central bank is actually seriously thinking about doing that, because no central bank wants to run a help desk, people ringing up the Reserve Bank of New Zealand saying, oh, I lost my password, or I paid 10 cents and it hasn't shown up or whatever. They're never going to do that. So it would mean a private operator. We've already seen that work successfully at population scale in Kenya with M-Pesa. But the problem with that is it becomes a single point of failure and under the control of a private operator. I'm not sure we want that. So let's assume that we're going to go for something with multiple operators. With multiple operators, we immediately have the very technical problem of double spending, the central problem of electronic cash. How do you stop me from sending the same money to Steve and Maxine before they find out it's the same money? That's called the double spending problem. And there are essentially three different ways that you can, and only three different ways you can solve the double spending problem. You can solve it in hardware, because if you have tamper-resistant hardware, that can't be copied. Software can be copied, but tamper-resistant hardware can't. We can do it in software, come back to that in a second, or we could do it in nature using quantum states, because you can't copy quantum states. And if you think I'm joking about that, there's a very good paper by the Reserve Bank of Sweden that came out at the end of last year about the use of quantum technology to create digital cash that can't be double spent. Why it wasn't called Schrodinger's cash, I've got absolutely no idea, but I know more about marketing than they do. But I think waiting for quantum technology might be outside the Payment New Zealand horizon. Even that might be beyond Steve's horizon there. So I think we'll ignore that for the time being. And we'll go back to software and we'll say, well, in software, how did we stop double spending? Basically, there were two ways of doing that. So before Mr. Satoshi came along, we had to have a centralized database, which of course nowadays will be put in the cloud. And what did we put in that centralized database? We either managed account balances, a bit like Barclaycoin, or we put tokens in it, a bit like eCash, which, by the way, is the Swiss central bank recently published a paper using eCash as a potential implementation method, which they will never do, by the way, because of the anonymity. But then along came Mr. Satoshi and made a genuine breakthrough. He put together some technologies and came up with a way of doing this without a centralized database, by using blockchains. And what are those blockchains used for? They're used to transport two kinds of value. There's non-fungible value like Bitcoin. One of the many reasons why Bitcoin isn't money is because it's not fungible. And certainly in English law, and I would imagine in Australian and New Zealand law, fungibility is a key attribute of money. Bitcoin is not fungible. All Bitcoins are not the same. Or you could implement fungible tokens, ERC 720 fungible tokens. So that's USDC is the example I've used there. They are all the same and they can be money. So if you follow my little tree down, what that gives you is essentially three ways of implementing. Oh, sorry, this thing is annoying me. What that gives you is essentially three ways of implementing money. Sorry, I've put them in red to make it easy on here. Chips, clouds, chains. So here we've got clouds, chips, and chains. So we can put it in the cloud, sort of like M-Pesa. We can put it in chips, a bit like Mondex. There's one or two people in the audience that are old enough to remember that, I would imagine. Or we can put it on a chain. So the question is, how are we going to implement a retail central bank digital currency? Are we going to use clouds? Are we going to use chips, or are we going to use chains? Well, as Exhibit A, I'll point you to, this is Visa's paper from December last year about implementing central bank digital currencies that can be used offline. And they've opted for the same solution that Mondex did all those years ago, which is using trusted hardware. So they've said, if we want to be able to go offline, if we want people to be able to pass electronic cash from one to another without going through a central a central system of any kind, we have to have hardware. So does that mean we'll go back and get Mondex from the back of the cupboard and reissue that? Well, not really, because obviously if you're going to do that nowadays, you'd put it in phones like the Chinese have done. And actually, you'll end up with, this is my sort of straw man for what somewhere like New Zealand should probably implement, which is not clouds, chips, or chains, but clouds, chips, and chains. So in other words, we use tamper-resistant hardware so that we can do offline transfers. We have tamper-resistant hardware, but in the cloud for people that don't have devices that have tamper-resistant hardware, but obviously they can only do transfers when they go online. and we have some form of ledger sitting behind this that records the transactions to stop any attempts to defraud the system. So that was my hilarious. So it's not clouds, chips, or chains. It's clouds, chips, and chains all together. So let's just quickly make one more point. So this is me mouthing off in The Economist a few weeks ago, because I just want to reinforce the point that just because we have that straw man, which I think I can justify, which is actually we want to use clouds, chips, and chains, that doesn't mean that every currency will be the same, you know, because there will be different aspects to how those things are implemented, which will make currencies different. And I do have a strong feeling that privacy might be one of the differentiators in that space. So that's my straw man, but that's not saying that all of these things will be implemented in exactly the same way. Okay, so now let's get to the final, you know, I know I've dragged on a bit, but let's get to the key point here. So basically, who is going, so we've got that space race for technology, who's going to win that Cold War for influence that we talked about earlier on? I wrote a book about this a few years ago, and I said essentially that there's probably sort of 3 different groups that could implement this, my 5 C's of different kinds of money. I said we can, you know, you can imagine it being done by public authorities like central banks. You can imagine it being done by private companies, which could be banks, but I wouldn't necessarily restrict to banks. Or you could see it being done in this new way with money as an emergent characteristic of communities. And I when I set my stall out, I said, actually, I think in the long run, there's something to be said for this sort of more community. And I still think that's true, by the way, even post central bank digital currency, which is that in the long run, we might well see money that emerges from communities because it shares the values of those communities. That's not what we're going to talk about today, but in the longer term, I think that would help. So here's an example of each. So let's have a look at an example of each of those and see what's happened. So if we take a look at the private example, we have DM. Facebook is a much better name. I just, you know, I'm not going to charge them anything for that. I'm just going to tell them that's a, you know, if I was doing the marketing, it would be Facebook. So that's a fantastic name. So, so that was DM. It started off as Libra. Everybody hated it. It mutated into DM. Everybody still hated it. It mutated into DM stable coins and is now going to be a dollar stable coin. And actually, that's not a bad idea. You know, if you've got Facebook, Instagram, WhatsApp accounts, and you can send dollars to anybody else that's got one and it's instant and free, well, why not? I mean, actually, I can see a great many benefits to that. But I think that's not the play. That's not the play. If you read the original Libra white paper, it says right at the very end about portable digital identity. And as I've said on multiple occasions, you don't have to listen to me, you just have to follow the money. The DM network is this, you know, it's got 15 different companies, I think, at the moment, and it's all shared between all of these different people, and they're all going to work together to create the DM network and so on. The wallet, Novi, 100% wholly owned Facebook subsidiary. So the reason I'm putting that up there is because I think the business model around this is going to be around the wallets, because nobody's going to make any money out of the central bank digital currency, except consultants, of course. Every cloud has a silver lining. Now look at the public alternative. So if we look at the People's Bank of China, I saw a thing the other day which I couldn't resist making fun of, which said, you know, was this a reaction to Facebook bringing out Libra? It's like, you know, the People's Bank of China doesn't have knee-jerk reactions to anything, I can absolutely assure you. So, you know, their work on central bank digital currency goes back many years, and they've had plenty of time to put together the prototype that they want and to roll out the pilot last year. And they're going to have the global rollout in time for the Winter Olympics. So if you look at what's gone on in China, it's very clear they've been planning this for a long time. They've said absolutely they're going to phase out physical money at some point and basically make the whole system more efficient. What's actually going on in China? So here's the real system launched. I just want to illustrate a couple of things to you here. So the first thing is, you can see my red circle is, you can see it translated inside the circle. That's the touch it. So they've gone live with the person-to-person transfers offline. And as they say, even Libra can't do this. Well, Bitcoin or Ethereum can't do it either, because anything that requires a blockchain has to be online, and they need these to work offline. So this makes it highly unlikely, in my opinion, that you'll use some sort of blockchain at the front end of a retail digital currency. You will for the wholesale digital currency, but not for the retail digital currency. They've also gone with what they call bank wallets, what you and I would call smart cards. So for the small proportion of the people that don't have a smartphone but want to use the digital currency, they've gone with these cards that have the liquid paper displays, which I absolutely love. Those liquid paper displays only use electricity when the display is changing. So you know, your card says $20. You go in and buy some $10 worth of food in the store, and you tap the card to go, and now it says $10. And I love that stuff. So that's absolutely brilliant. So that's what's live. You know, this isn't some far-fetched science fiction. You can already, there's 3,000 ATMs in Beijing already that have this live. You can go and get it. And then, of course, there's the new kid on the block, which is the cryptocurrency. I can't help pointing out that there was a lot of excitement a couple of weeks ago when there was news that El Salvador has adopted Bitcoin as legal tender, which is not true, of course, because the Bitcoin law in El Salvador wasn't about legal tender; it was about compulsory tender. It's a misunderstanding. In the El Salvador law, you're going to be compelled to accept Bitcoin, whether you want it or not. So so shops will have to accept it, which is an odd kind of thing for something that's supposedly a libertarian, anti-government, anti-censorship version of the future. But there we have it. And it's the latest in a long line of compulsory tender experiments, all of which have failed. And I don't imagine this one will be any different. So I just wanted to flag up there that, you know, what they're doing in El Salvador is, you know, handing over payments to a private monopoly and then forcing everybody to accept it. And it's nothing to be cheered or celebrated. And it certainly doesn't mean that Bitcoin is going. And in fact, Bitcoin has collapsed since this announcement was made, and so has the cost, so has El Salvadorian debt. So the markets have made their views very clear. So in summary, let's go back to this diagram here. Sorry. So in summary, I think we're going to be looking at a straw man that looks a bit like this. And it has some pretty significant implications. The US banks recently submitted a statement to Congress, or whatever the committee was, saying that this is all terrible and the roof's falling, in which of course they would, because, you know, banks would never, you know, turkeys don't vote for Christmas, as they say. This has really serious implications, because if people, or more to the point, things and bots, begin to transact by sending digital currency direct from wallet to wallet, then it will never go near the existing banking infrastructure. And you could easily see a situation where, you know, my gym membership, I mean, I'm picking a hypothetical example, obviously, but my gym bill is due. I get a message on my phone saying you need to pay the gym $40. I press OK. The phone, if it doesn't have $40 loaded in it, will go to my bank account, pull out $40 in central bank digital currency, which the bank can't charge for. And then we'll send that $40 directly to the gym's wallet. It doesn't go through the banks or the switches or Visa or MasterCard or faster payments or anything else. It just goes over the internet from one wallet to another. And we need to think about what that means strategically. So for the last couple of minutes, let's just go to the questions here that I didn't get to touch on during that. So I hope I gave you a good high level. I mean, obviously, there's so much more interesting stuff here. This is just a high level thing to get you guys thinking. I hope, but I hope you'll delve into it, because it really is what's coming next. So just to answer these questions, are we talking about blockchain technologies? I think we are for wholesale central bank digital currency, because that actually addresses a different problem, which is if we want to use digital assets in wholesale, which I think we do, then we need to be able to have a form of money which will exist on the blockchain along with the assets, which we don't have at the moment. And that would be some form of wholesale central bank digital currency. And that will be implemented using, smart contracts. I mean, they're not smart, and they're not contracts either, but it doesn't matter. But for retail, I don't think so, because a crucial characteristic of retail is it has to be able to work offline, and that rules out blockchains completely. The next question says, are we, I lost my thing. The next question says, are we using, answer live, there we go, done. Are we using a distributed model for digital currency or just the digital form of fiat currency? No, here we're talking very definitely about a digital form of fiat currency. We're not talking about distributed alternatives. What we're talking about here is the central bank New Zealand dollar, but just a digital version of it, which would be legal tender and used in all sorts of transactions and so on and so forth. Oh, sorry, I pressed the wrong button again. Go back to inclusion in a second. How does it go from the banking system to the wallet? How does the gym get to use the value? Well, now that's an interesting, in fact, I was involved because of some other work I'm doing, I was involved in a discussion about that today, because what would happen, of course, is during the day that, the gym sends out the requests for digital currency. The digital currency builds up inside the gym's wallet. And then the gym would decide, actually they wouldn't, they'd have bots that do this for them. The gym would decide, well, we're going to hold $500 in the wallet just for quick spending on things, and the rest of it will go to a deposit account, because just in the same way in my actual wallet, I don't hold thousands of pounds in my actual wallet because I'm worried about dropping it and losing it and all this sort of thing. And I know I don't need it, You'd only have a relatively small amount of digital money in your phone because you're just using it for buying coffees and going shopping and stuff like that. Your money, most of your money would still be electronic money sitting in the bank. But of course, it is interesting to reflect on the fact that because you can pull the money from the banking system and then switch it through the internet and put it back in the banking system at the other end, that does make you rethink the role of certain intermediaries in certain kinds of transactions. Sorry, just to answer the next. What's my thing here? Answer live. There we go. Done. How will CBDC help with inclusion? That's again a really, really interesting point. So, as you'll have seen in the diagram I put up earlier on, I'm not thinking about central bank digital currency as just being for people. I'm thinking about it being for things and bots as well. So the idea is you can have wallets. For example, in the European Central Bank, they're saying these wallets will be limited to €3,000. I don't know whether that's a good idea or not, but they're not bank accounts. So there are lots of people who are unbanked and underbanked, people who can't get bank accounts or have bank accounts but don't really use them because they don't have access. It will be much cheaper to service those people through wallets instead of bank accounts. They cost the banks a lot of money and don't generate any costs. So take those people out of the banking system, unbank the banked, as Lisa Wade says, and serve them through a more cost-effective wallet-based infrastructure, and leave banks to focus on the thing they're supposed to be doing, which is providing and managing credit and risk. There's no real reason why they should be doing payments. We can have that all routed through the wallets. Could you imagine situations where you will allow wallets in places where, so for example, I might want a bank account, but I don't have papers, or I don't have a driver's license, or I've just arrived, or I'm British and they won't give me one. Well, maybe you can have a wallet just on the basis of a mobile phone number or a Facebook account or something like that. And if you think that's a silly example, it's really not. Because actually, if I get up to no good, Facebook will be able to tell you where I am, what I'm doing, and who my friends are, whereas the banking system would only be able to tell you it's a forged Portuguese passport. They wouldn't be able to tell you anymore. So that's an interesting version of it as well. How is this digital? Oh, sorry, but just one more question then, Steve. How do you see the role of traditional financial institutions? There are too many questions. Steve, stop these people. I don't know which questions to answer next. what is the future of payment provider, wallet provider in digital banking? Well, I think the thing is, digital currency makes you think about payments and banking quite separately. So as many people have written, there's no economic model which can explain why it is that banks do payments. It's just a historical accident that we've put the payment institution and the credit institution in the same box. And actually, it might be better for everybody if banks didn't do payments, if banks focused on credit and the risk management that goes with it, and lots of people could do payments more effectively. And if we came into that kind of world, then we would begin to unbundle some of the things that are bundled together now and implement them individually more seriously. Steve, I'm sorry, I've run out of time on this, but what I will do, Steve, is if you send me that list of questions, I promise I'll do them on email and get them back to you if that's okay. So let me just take a copy of that, and I will.
Great.
I'll hand
Thanks,
back
Dave.
to Steve. So, Steve, I apologise, but they're too interesting and they're sending too many questions. I don't know what to do.
They were great questions, and we're a bit of a slow starter in terms of getting those through, but I think it's a good indication of the interest and the content that you were sharing with us today, Dave. So thank you so very much.
Well, I promise I will answer all of those questions, and I'll post it on LinkedIn.
Thank you very much. Particularly like your notion of, for us and perhaps Australia, that regional approach to digital currency, because that sort of ties in quite nicely with a lot of activity that's happening, trade agreements between jurisdictions as well. So yeah, fascinating notion. But thank you, Dave. Loud applause is happening around the country as we speak, and that's not because of England's victory. It was because of your presentation. Thank you very, very much. I'd now like to call on John and the panel to join Dave and take us through to the next session. And while they're joining us, the panel today, they're going to talk some insights on payments trends across various jurisdictions and sort of really look at who is influencing payments and the role of those organisations in playing and shaping the future of the industry. So John, welcome. And also Andy and Maxine, thank you so much for joining us here today. I will now hand over to John, who will guide this, as I said, this panel of overachievers through the next section of the hub today, and really looking forward to hearing what you've got to say.
Great.
Thank you, John.
Thanks, Steve, and yeah, great presentation, David. So yeah, really warmed the room for us. So we're just going to jump straight into it because we've been introduced already, and I think what it's worth doing is getting some local perspective. We'll build up on that. So to follow on from what you've just covered off here, David. So Maxine, I'd like to just jump over to you straight away, and can you share some of the New Zealand perspective of what's emerging, what you're seeing now as the trends here in the payment space?
Sure. You know, I actually found that really fascinating, David. Thank you. And I guess it really talks to the fact that the future of payments is going to be significantly different to the way it is today. But just, you know, commenting a bit on the New Zealand perspective and more of probably a future that's a little bit closer, I guess, and the context of some of the things even around COVID that have been different for New Zealand to the rest of the world. I mean, New Zealand, of course, we have, you know, a subscale market, which makes our dynamics quite different. And also our whole ecosystem is quite different from other parts of the world, particularly from Asia. And I think because as a subscale market, the industry, of course, you know, had got together very early on and created our plastic debit card that was low to no cost to the merchant and the consumer and drove cash out of our market, as you noted earlier. It was very successful and it saved the banks at the time a lot of money, and the consumer uniquely had a very ubiquitous experience. They could use that card anywhere, anytime, no minimum charges, practically no cost. So we have ended up in this position of being largely cashless and almost 100% banked. And certainly when you look at parts of Asia and what's driving a lot of the future of payments there, it's about driving cash out. It's about dealing with an unbanked society. So some of the drivers in New Zealand are different, I guess, and probably in some degree more challenging. We're not having to worry about driving cash out of the market. We already have a system which is ubiquitous and available to everyone, which means that what are we replacing it with has to be, a significant kind of change and a reason for that change. And then on top of that, you have the subscale aspect of our market. And, we led the world for some time in payments because we recognised that subscale. But, we're in a position now today, and that was very much a Kiwi Inc. thing. And I guess from a government perspective, payments, you talked about sovereignty issues and the power of nations such as the US. That wasn't an issue. It was all sitting here in New Zealand nicely. With COVID, yes, we saw also the rise of contactless here in New Zealand, which is really meaning the demise of our original local EFTPOS and the shift to very much a scheme world here in New Zealand. And I think that's probably, the big thing that's really happening in New Zealand. We've gone from a payment system which has been very much New Zealand based and controlled to one which is essentially global. And I think for us, that's really going to be one of the challenges for government here and for New Zealand to grapple with. How do we move forward and innovate and create that local innovation when you've got a subscale market? And make sure that, our payment system isn't completely globally controlled. And, the payment system is a two-sided market, right? To be successful as a fintech, you need to have scale in merchant acceptance and scale in consumers, particularly in a market like ours where everyone expects to be able to use, that payment method everywhere. Otherwise, it's just not a compelling value proposition. And that's a really tough thing to do. And if you can't get pretty much the whole market, you don't have a business case. So it's, that's why ultimately, we risk seeing more and more globalization in New Zealand because that's how you get scale in this kind of small market. So I guess, one of the big questions we have in New Zealand is how do local solutions survive, and how do we get that ubiquitous experience that we've always enjoyed in a digital world of payments for Kiwis, or are we just going to be globalized? So I think, one way, of course, has been, although, you talked about banks kind of phasing out of the world of payments, but, their local support of fintechs and using their scale to get to merchants and consumers and enabling ubiquity of new solutions in the future is one way of kind of, I suppose, keeping an element of localization and Kiwi in it. Because otherwise, New Zealand will kind of lose that local advantage. And as I say, I think it will go to tech companies, whether it's Facebook or Apple or the global schemes. New Zealand's been working on open banking and APIs for some time, and, PNZ's been active in that space. But, it's been hard yards and it's taking a long time. So I think there's a real question in New Zealand as what role do the banks play going forward, and, what is their role in facilitating that local innovation, or are we all just happy for it to all become global and have some of the issues in terms of that sovereignty and of our payment system? So I think globally, while we're seeing the rise of fintechs and local solutions, and particularly more in the Asia market, in New Zealand right now, we're kind of, probably going in reverse. We're going from very much a local payment system to really, at the moment today, the people shaping New Zealand's payments are the global schemes.
Great. Thanks, Maxine. So I think what we'll do first is just to get some perspective from Andy, so across the Tasman, and to see if there's any similarities, or are we seeing anything different in Australia? And then David, revert to you to sort of get some comment around this as well.
Thanks, John, and thanks, Dave, for your introductory remarks, and Maxine for your perspective on New Zealand. Some real echoes to what Dave talked about earlier in Australia. Certainly through COVID, we were already heavily contactless. I guess what we've seen change there is the switch from physical card to wallet, and the growth in digital wallets. So some of what Dave referred to there. I think the QR code side is interesting because we were already heavily contactless. I guess in a way we didn't see the need to work on QR codes from a payment perspective previously, but that has definitely changed. You're now seeing QR code implementations that are payment focused, and so there is a real need to standardize that space to make sure that it actually works ubiquitously for customers and for merchants. On the merchant side, I think, and I'm conscious of the picture behind me showing someone tapping a mobile phone onto a payment terminal. The bit there that we're seeing is definitely what we've talked about for a while as a bit of a joke, as the game of phones. We're now seeing because that payment terminal is increasingly actually being replaced by another mobile phone. As you get the kind of tap to app implementations coming out in market. So again, that sort of digitization from the merchant side, and obviously, that has the advantage of lowering costs for merchants. I think, as Dave alluded to, cash is a bit more nuanced. So he deliberately focused on the UK, but in Australia, for example, what we know is that banknotes in circulation are at record levels. Each Australian has apparently 17 Kermits, as our $100 notes are known, because they're green, by the way. That's why they're known as Kermits. I've been in Australia for 14 years now. I think I've seen 2 of them, but the stats say that each and every one of us has 17. So that suggests, cash is a store of value. It's a fallback mechanism. There's probably a black economy side there as well, which we won't dive into, but it's certainly more nuanced as you see cash transactions decrease and a focus, as Dave sort of hinted at strategically. I think the focus probably less on access, actually. The RBA released a study last week that showed that access to cash is pretty good for the average Australian in terms of access to ATMs or equivalents. But the issue really there is around acceptance and merchant acceptance of cash as some people continue to use it as a preferred payment method. I think in terms of who's shaping payments, a couple of comments there. I think we shouldn't forget the regulatory view here. I think the regulators are definitely shaping payments increasingly from a macroeconomic perspective. The digital economy is the economy, and so regulators are inevitably, and government are going to be focused on payments, and that's why we're just going through a government-led review of our payment governance architecture. I think that's also focusing in on issues around licensing, same risk, same rules for paytechs and PSPs, as there's a recognition that they're shaping payments as well. And I think the merchant side that I mentioned there, merchants are a key player here. If you think about who owns the customer, as Dave has kind of hinted at, it may be the platforms, it may be the merchants rather than just the banks. Just a comment on something that Maxine mentioned. I think the subscale market problem is something that we're conscious of in Australia as well, despite being a bigger market than New Zealand. And I think the question there is how you build critical mass. And I think the interesting piece there is, international interoperability gets talked about a lot in different circles, whether it's payments, whether it's open data, whether it's digital identity. And I think, the idea that interoperability, an easier use case could be interoperability between Australia and New Zealand, is an interesting one to explore. And you're already seeing government starting to do that with e-invoicing, with digital ID, with the idea of a consumer data right in New Zealand, marrying up to the one here. And of course, all of that hints that it's Dave's made this point already, that it's not just about payments, it's about data, and therefore it's about digital ID, because digital ID is really the enabler there to that.
Excellent, thanks, Andy. And it certainly touches on some of those points that David was talking about earlier. So David, do you want to link this back to some of those points? Because I think you've got some of the themes already covered.
I think I actually, before I talk about Max, the point that Andy just made about regulator is really important, because certainly in the UK, in Europe, the regulators are a bit fed up with the banks. The cost of financial intermediation remains stubbornly high in the face of all technological innovation. The lack of competition, the paucity of new services is, and I'm not unsympathetic to banks. I mean, they're clients. I mean, I understand the world that they work in, but they simply don't have the capacity to develop the new products and services that the new economy needs. And so part of the regulatory drive certainly is not just because, we hate banks, they blew up the economy and they're all bastards. It's because they're kind of industrial age institutions that aren't manufacturing the products that we need for the new world. So the regulators, I mean, it's kind of tangential, but I was at I'm a judge for a payments awards thing, and I was looking at some of the things the other day that some of I think of them as kids. They're not really kids, but some of the stuff they were doing around they were focusing on demographic products and multi-generational products, and really, really inventive stuff that we just don't have in the existing banking system. I have a fabulous new fancy, I love my Barclays mobile phone app. It's absolutely brilliant. I use it multiple times every day. It works great. But all of the products I access through it are things I could have had 30 years. It's a checking account, a debit card, a credit. There's nothing new in there. The thing my favorite product by miles is my Wise account. I've got a Wise multi-currency account because I work in a number of different countries, and that's an absolutely brilliant product which my bank doesn't offer and probably never will do. It's not there. So Andy's right. The regulators are shaping this, but round here, I don't know as well the situation there. There is a frustration with banks, and the regulators want to see more competition. They want to see reduced costs. They want to see some innovation. Just one more point, just to go back to Maxine's point about subscale and being, it's probably the wrong word to use, being at the mercy of the international schemes. Of course, that's what the European Commission is up in arms about again at the moment. They've started what we call the third scheme, the electronic, the European Payments Initiative. But in a weird way, they've opted for something which is strangely reactionary. It's almost a sort of nostalgic longing for the way payments used to work in the distant past, rather than focus on creating the competitive environment to allow new products to come into existence. So I understand the feeling of we want to control something ourselves. We don't want everything controlled by American schemes, but that maybe the best solution to that is finding ways to allow more competition, rather than trying to force any particular direction. Perhaps and actually maybe digital currency will allow us to do that in some ways.
So I'd just like to remind people they can submit some more questions here on these topics and some of the stuff from David earlier as well, to please keep them coming. Just to add maybe somewhat of a regional perspective on this too, around Asia. So what we've seen is certainly in the recent past is the focus on fintech, the funding of fintech, and bringing really bringing that to the fore. So with the big platforms, we're seeing it, and even in the small innovative side, so they're all getting a more of a leg up now. So that's certainly a trend. The second thing, and Maxine touched on that too earlier. The second thing that we're seeing is around the bilateral connections across Asia. So Asia is very much a fragmented market, and it doesn't have that sort of EU-style structure around it. We do have things like ASEAN and APEC, that are somewhat, bringing those communities together. But it is, it really is down to the countries, and it is down to the countries the sovereign countries who are actually taking the leadership roles here. So we've seen great example of that recently with Singapore and Thailand. And I think we're going to see more of that. There's certainly more on the cards. There's more being tested. And there's more sandbox environments for this activity now to prevail. So that is certainly another trend. And it does feed in then, of course, into the regulation that Andy touched on there too. So across the region, we're seeing this first of all, the update of the regulatory environment, applying that governance and oversight into the new age. And I think regulators are, they are cautiously moving into that, certainly getting more feedback and submissions around it to make that, to clarify as what the fintechs have been asking for, but also to mitigate any risks or any unforeseen issues that may be on the horizon. And to that end, they are learning from each other. So we do see things like Payment Services Act being developed out of Singapore, and now in Japan, they've been updating theirs. So we're seeing that as a licensing regime, but also to bring clarity and reduce some of those risks in the industry. So there's certainly what we're seeing in the Asia perspective. So look, just in the interest of time, I think we'll just move on to a couple of other things. So one of the questions that has come up in recent past is around open banking. It has been a big topic about how those fintechs get access to the banks, and I guess the question really is that something? What are we seeing here? Is that something that's working now, or are we? Is it a story that's been superseded now by these discussions around the currencies?
I can start if you want, John. I think from an Australian perspective, it's a slow burn in terms of the original consumer data right. That's probably inevitable to some extent because it started with read access. So it's simply the opportunity to share data with someone else rather than act on that data. I think the interesting thing is where it goes next, and I think. When I compare what Australia's done to, for example, the UK and Europe, I think one aspect they've got right is to think about it as a consumer data right. That means two things. One is the consumer is absolutely at the centre of it. They choose whether to share their data or act on their data or not. The second one is that it is economy wide. So we haven't started with banking and then gone, gosh, how do we plug in energy or telco or whatever it might be? There's a plan on that, and it should use the same standards. So as you start to see that data pool increase, energy is being actively worked on now. Telco is the next nominated sector. Everybody thinks superannuation will be the one after that. Then that starts to become really interesting and becomes an opportunity for that innovation that Dave was hinting at in terms of new business models around that broader data. I think the other game changer for us will be in parallel, and we're actually helping the relevant regulators sort of think about this within financial services, the piece of turning it from a read access to a write access, so being able to act on that data. So within the payments world, we tend to think about that as payment initiation. I think that absolutely is a game changer because that opens it up to access, for all sorts of third parties that could initiate payments that, maybe companies, maybe bots, maybe, whatever they are. And more broadly, it opens up different types of actions. And the obvious second one would be account switching. And I know from a policy perspective, that's where government see the real sort of rubber hit the road in terms of being able to switch your financial account, being able to switch your energy supplier, your telco supplier, whoever it might be. So I think slow burn, but a really strong foundation would be where we are now. And as I hinted at earlier, I think the idea of interoperability of that with that in Australia with New Zealand is a really interesting one and one that will deal with that critical mass issue.
Maxine, did you have any thoughts around how that's
Yeah, I mean, I think, obviously, as I said, with Payments New Zealand, the industry started on the road of trying to work towards open banking, itself, and that's been has been slow. Now we are seeing government really look at it through the CDR as well. I think one of the concerns for New Zealand is, while they're looking at it, there's a lot of issues still that they're, thinking about. And, the one in terms of payments initiation, the ability to write as well as read, I think, is one of them. And one of the concerns, I think, if we're to get innovation in any kind of timely fashion, widening it, while I think on one hand, to Andy's point, is a good idea. You're looking at all consumer data across the different industries. That's a massive thing. And to do that, I think the concern is will just take us too long. We'll be still waiting for a consumer data right in 5 years' time. By the time every industry has had their argument with government about it, and we'll have lost a lot of the potential gains we could have got through innovation. So, I think, yes, I mean, I think it's really important, and it will accelerate that competition aspect. And, potentially, if you reduce the costs of innovating, then you make in a subscale market it easier for people to innovate and in the market. But I think it could be too long and too complex because we try to solve all the world's ills across all industries, rather than, right now, here today, how do we get payments innovation happening?
David, are the banks playing well in your part of the world in this game?
I think obviously we were first into open banking, so we made a lot of mistakes. I think if you're I'd agree with what Andy said, by the way, about I actually do think the Australian focus is a better way to start than ours was, but we are where we are. And if you look at what we call the midterm reviews of open banking, the Reynolds report on consumer banking, on consumer benefits, and the Fingleton report on infrastructure, those are much better places to start from. But the key conclusion of that is that open banking by itself doesn't really deliver, the really big results that we want. We need, at minimum, open finance, and ideally open everything. So, for example, if I'm going to use some simple rudimentary AI, ML, wealth management stuff to help people sort out their pensions, precisely the kind of thing I personally don't want to do myself. In fact, I think it's odd that the current regulations mean I have to be involved in that loop at all, since I know least about pensions than, the bank knows more than I do, and the advisor knows more than I do, and the pension, basically everybody knows more than I do, but the regulation says I have to make the decisions. This is crazy. I'd much rather have a super intelligent AI doing that. But in order to do that, it's no good. It can just see my bank account and credit card. It's got to see my mortgage, my pensions, my life assurance, everything else. And that's kind of where we have to go next. And I've said a couple of times in other contexts that gives us the kind of organizing principle of financial health, rather than, individual financial services, as a way of kind of envisaging that next generation industry. And I actually think that's quite appealing. So kind of where we started from, we've learned a lot. I wouldn't get there from here. But what we have learned is, open banking by itself is not enough.
Great. So I think we'll jump into some of these questions here. And thank you, David. You've been answering a lot of them, so that's good, some from your session. I think the first question to dive into here, we've touched on it earlier, was the buy now, pay later. So the people are interested in panel thoughts on buy now, pay later and how it's changing the payment landscape. And I'll probably just go to Andy on that, just seeing as it seems to be such a hot topic here in Australia at the moment.
Sure. Thanks, John. Some of the buy now, pay later operators would argue that they're not changing payments at all, because they're not a payment tool. They're just a marketing tool for merchants. I think I think it's interesting when, again, from the regulatory perspective, the RBA have included buy now, pay later in their review of retail payments regulation here. Their initial conclusion that they've put out for consultation is that effectively there are surcharging rules on cards, both credit cards and debit cards. There are no such surcharging rules on buy now, pay later. And in fact, under the terms and conditions of some of those buy now, pay later schemes, merchants aren't able to surcharge, despite the fact that the cost of the merchant is sometimes higher than it would be under a debit card or credit card. And the RBA's conclusion is that actually now's not the time to regulate that space, because this is innovation and you want to encourage innovation, and once it reaches a certain scale, then that might be the time to regulate it. They also raise the point that their current regulatory powers don't actually cover buy now, pay later. So that probably is one for that wider review that I talked about earlier, the Treasury review, in terms of getting the regulatory settings so that I think the RBA is doing the right thing. It's encouraging innovation. But once an innovator is scale and is a competitor to other payment mechanisms, then applying that kind of same risk, same rules argument that I made earlier, so that payment types are regulated in a similar manner.
Just a very quick question, Andy. Are the banks regulated any different when they bring out their buy now, pay later schemes versus the ones that are the fintechs essentially bringing to market?
So no, only insofar as the ADI license would apply to funds held, but no, and so it is really about that as a payment mechanism.
Excellent. Anyone else on to offer a few words?
Just to say, Ron, John, I think the regulators here, by which I mean Europe, are getting a little bit nervous about buy now, pay later, and the there are stories continuously about kids getting themselves into a lot of trouble with this sort of stuff, and so I think at some point it's going to have to be constrained in some way, because it is a bit of a regulatory arbitrage at the moment to get round. I don't mean that Machiavellian way. I mean, it's an opportunity, but I can't see it continuing unfettered, so to speak.
Yeah, it's not a matter if when. Maxine.
Oh, I was just going to say, I guess the only comment that I find is probably a little ironic is, at the moment New Zealand's going through a process of looking at, payments regulation, and particularly the cost for merchants of payments, and yet the buy now, pay later schemes are probably the ones that the most expensive for a merchant at the moment, but yet they feel compelled because they've done such a wonderful job with the consumer, and they want the customer in the store to buy. It's a fabulous value proposition, but it is quite painful for the merchant who feels compelled to use it, and yet it is very costly for them. So, yeah, I mean, it definitely needs to be, if New Zealand government's really looking at reducing the costs to merchants, it's an area that can't be ignored.
Great. So we're just about out of time. So I'm just going to ask one last question, and it's the question you see on the screen here, but it's possibly for you, Maxine. I'm not sure if you have the data on this. Do you have any sense of not unbanked? Maybe, okay.
No, that's probably a PNZ question, actually.
Yeah, that's true. That is true. I was going to, maybe that's something to be included in those questions later that we'll add to. Okay, so there's one last question just come in. Can I just make one point about the unbanked? So in a country like New Zealand, I would imagine the number of unbanked adults is actually quite low, but the number of underbanked adults will, I think, be higher than you'd think. In other words, there are lots of people that have a bank account, but don't really benefit from it. They don't really use any, they basically just draw their money out because the government has seen its inclusion targets in the past in terms of bank accounts. And actually bank accounts are a very expensive way of reaching, certain segments of the population. So although the number of unbanked individuals is quite low, that doesn't mean that banks are the best solution to some of their financial services needs. So just to flag up that
even in places like New Zealand, there's opportunities to kind of reshape the way financial services are delivered, I think, personally.
I think you've set up another great topic there for the future of banking, and maybe from the payments perspective too. Well, great. Well, thank you to the panel. And I'm going to hand back over to Steve now so that he can conclude proceedings.
Thank you very much, John, and thank you very much to the panel. As you can tell by one, the questions, and two, the interest in the topic, we probably could have kept talking for another 2 hours, but I'm afraid everyone's got to go and get back into their day job. So thank you, John. Thank you, Andy. Thank you, Maxine, for joining us today on the panel. And thank you to Dave from beaming in from the UK for both the keynote and also the panel discussions. It was very, very interesting and very, very insightful. We've got a bit of time if there was any other farewell remarks, and then I'll let you get on with the day.
Well, I just want to say thanks for inviting me again, Steve. It was a really enjoyable discussion, and just thanks to everybody for the questions, because they really made me, I like it when the questions make me think as well, and I really appreciate that. So thank you.
Yeah, thanks for having us, Steve. Really appreciate it.
No, thanks for coming.
Yeah, thanks everybody. That was really interesting. Great presentation, David. Thank you.
Awesome.
Great.
Thank you all.
Quick question, Steve, are we making this available online afterwards?
Yes, we are. The session has been recorded, so that will be up on our website probably early next week, which will be good. So the answer to that is yes. So you can go and have a look at yourself next week.
Yeah, some of the people were disappointed they couldn't get to log on. So yeah,
right.
Good.
Yeah, that'd be great. So thank you very much, and thanks all. Really appreciate it.
Cheers. Thanks. Bye now.
I'd also like to take the opportunity to again thank the sponsor for today's session, FIS. Really thankful for your support as we go through. And on the Hub series, we've got another 2 to come, one at the end of July and one at the end of August. And that's all about what tech is shaping the future of payments. And that series is supported by and sponsored by Buddle Finlay. So thank you for that, Buddles. Now, Melissa Clark-Reynolds will be joining us as keynote, and she'll provide us with some insight into how to thrive in an era of disruption. So please tune into that. I hope you can make it. It's going to be a really, really interesting session as a follow-on to a very strong session one that we've had here today. As we conclude, at the end of it, a survey will pop up in your server. And so just please take the time to just give us some feedback on what you thought of today's session, how we can improve things, and just what to think about into the future as well. As I said, the session was recorded and will be available. And of course, we'll be making the draw for 15 of these copies of David's The Currency Cold War. So keep an eye out for that in your inbox, whether you'll be one of the lucky recipients. Again, thank you very much for joining us here today, and I hope you enjoy the rest of your day and the rest of the week, and I'll see you at the end of July. Bye for now.